topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning. It's another Monday. Hey, let's get off to a good start this week. We all got up. It's a great day. Sometimes days like this can be hard days. Sometimes it's an easy start to the week. We make what we make out of it. It depends sometimes on your attitude. Sometimes your attitude depends on other people. You let the other people's attitudes roll off your back, and let's get started in a great week. Tax deadline passed back on April 15th. Now what do you do? Do we just ignore taxes for all of 2025 and act like it's not there? Do we start planning? What do we need to do? Maybe you didn't file and you have an extension and you need to get ready to file your taxes, before October. Or if you are running a partnership or an S Corp, you've got to get them filed, in September. So everything is about getting ready, being ready, and following through with either your plan or, the items that you need to take care of in 2025. So whether you filed your tax return or filed an extension, one of the first things you need to be paying attention to is, do you have to make estimated tax payments? See, that first estimated tax payment was also due April 15th. That kind of double witching hour out there. They get you hit with 24's taxes, and then you got to start paying on 25's taxes. So if you are running a small business, or maybe you under withhold on your W-2 paycheck, you possibly have to make estimated tax payments. Now, the IRS isn't really nice about this. They don't truly give you quarterly estimated tax payments that you would think of. The first one was due April 15th. Your second one is due June 15th, then September 15th, and then all the way to January 15th of 2026. So those are the 4 estimated tax payments you are required to make if you're required for estimated taxes. And you've got to make sure you're paying those in and paying the right amount to avoid penalties and interest on estimated tax payments. It becomes as simple as that. We have a whole podcast on estimated tax payments. If you need to know how to figure those out, go to taxtalk4u.com, subscribe there, and then you can see all the prior podcasts and find the one that has estimated tax payments on it as well. Now, so maybe you don't have to make estimated tax payments, but you did your estimate for 2024 and you found out that, hey, you're going to owe, but you didn't want to file then. Unfortunately, the IRS did require you to pay all taxes due for 2024, at least up to 90% of them, and on April 15th or before, whether you filed or not. That extension of time is only to file, not to pay. So maybe you're going to still owe. What do you do? We kind of suggest going into irs.gov, go in and make payments, make periodic payments on that, even up to the time that you file. Make sure you record those payments properly in the right year for the right tax. And that way, maybe the penalties are reduced, a little bit less interest, and you're making the initiative to pay on that. Or maybe you've already filed and you owe. We'll kind of get into that in a few minutes in talking about what to do when you owe. And maybe you don't just owe for 2024, but maybe you owe for 23, 22, 21. Those are the kind of things that you've got to deal with, because interest and penalties continue to mount month after month on the taxes that you owe. Now, if you're running a business, maybe you're a partnership, maybe you're an S corp, and you need to file those taxes. Hey, one of the things that you need to do being in business is have good bookkeeping. Bookkeeping is not a guesstimate. We've had clients come to us with guesstimates. And how do you know it's a guesstimate? Because of the inconsistency or the consistency of the numbers. Inconsistent with normal operations of business. We have been doing taxes a very long time. We kind of can tell when somebody is just providing us numbers that they just decided to give you on a whim. And if we can tell it without any extensive, AI or logarithms on these, the IRS is going to tell by their extensive computer analysis that they continue to do. Or maybe you came to us with round numbers. See, this is an IRS red flag. And, we talk about IRS red flags all the time, but round numbers. So if you are a trucker, by the way, we do trucker bookkeeping. So if you go to truckertaxtools.com, you can sign up over there for bookkeeping. It's just strictly $25 a week. Simple, easy, cost-effective, keeping up with your bookkeeping. But we've had clients come to us with round numbers. If you're out there transporting goods and you're going to tell us that your maintenance and repairs was $40,000, your fuel was $50,000, your travel meals was $10,000, office supplies were $2,000, insurance was $16,000. See, these are all round numbers. These are huge red flags in the IRS's eyes. They know you didn't take the time or effort to actually put true numbers together. And yes, it takes time. It takes effort to put numbers together that are true and accurate. Regardless of what business that you're in, you have to take the time to do that. So when's a good time to start doing bookkeeping? Well, actually, the best time was starting January. Start the new year off in doing bookkeeping and your commitment to bookkeeping. If you didn't start it then, the next best time was starting February. And what's the next best time? Right now. Get yourself caught up to this year's bookkeeping. Get yourself up to date so you know, hey, where is my business going? We talk about the benefits of bookkeeping, and when we're talking about taxes, the benefit is having good, solid numbers you can support through bookkeeping. But what's really the best reason? Yeah, having good, solid numbers for taxes is a top 5 reason. But the number one reason to do bookkeeping and have good bookkeeping is that you have good financial numbers to know where your business is, where it's been, and help you to plan going forward where you want it to be. So we don't use just bookkeeping for tax purposes. We use our bookkeeping to help give businesses information to run their business better. Hey, we had a question come in from June asking about the $25 offer. The $25 offer is for our truckers. Yes, we can put together a package for you that's very competitive for your business. If you give us a call at Trucker Tax Tools, we can give you a quote. Trucker Tax Tools is set up specifically for truckers, but yes, we do some other businesses out there as well. I have been in this industry of bookkeeping and taxes for close to now 40 years. Been helping small businesses across the nation put together information and save money on taxes, minimize their tax bill, maximize their profit, keep more money in your pocket. That is what we are all about, in helping people to beat the IRS, and keep your money, lower that tax bill down. Judy, do we have smaller plans for very small businesses with less than $40,000 a year coming in? Unfortunately, that is our lowest possible cost out there. All of our work here is done here in the U.S. We do not sub it out anywhere else. So you can give us a call at 877-996-2477, or you can go to truckertaxtools.com and you can schedule a time for us to talk to you so that we can put the right plan together. What we try to do is help people, and that's what we're here to do. Hey, when we come back after this break, we're going to talk more about getting things ready for filing your S Corp or your partnership return that you may have on extension. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're going to talk a little bit here about, S Corps, limited liability companies, partnerships, and the filings you've got to do, and, what you should be doing in preparing for these filings that you may have an extension. Limited liability companies and S Corps, if depending on how they're set up, will depend on what you really need to file. And what I tell people to do is, first thing, to go back and look at your EIN letter, your employer identification number that you got when you established your business and you went to the IRS and filed the proper forms. That form will tell you exactly what you need to be filing. And so if maybe 2024 was your first year in business, go back and look at that employer identification number letter and see how it says to file. And we ask everybody that becomes a client of ours, especially first-year clients, to get us that EIN letter, because we want to see how you were set up. Because an LLC can be set up several different ways. And, the first way is a single member and files on Schedule C. Well, that goes with your 1040. So there's no extra filings besides your Schedule C with your 1040. Sometimes they're set up as multi-member companies, and those would have a partnership filing. But we have clients that come to us and say, oh no, I have this LLC and it's set up as an S Corp. So we ask for the EIN letter. We ask for the S Corp election letter so that we can verify how this was actually set up. Because what you think you set up with the state because you said you wanted to be an S Corp, that is not a state designation. That is an election through the IRS and has to be accepted in order to become effective. And then they will give you effective date. And then you've actually got to make sure that if you opened up this LLC, you've actually done business under the LLC. Somebody laughed at me when I said that. We have a client that came to us that opened an LLC, but continued doing all his business underneath his DBA. And he said, I was talking to another person who did this, and they said, yes, it's okay. Just open the LLC, and all of a sudden, you're an S Corp. That doesn't happen. And all of a sudden, all the business is underneath it. Nobody told me I had to open up a separate new bank account. Nobody told me we had a new employer identification number so that, we have to run and give everybody we're working this employer identification number and run the business through that other new bank account, not my old bank account for my DBA. Then they set up payroll. Where did they set up payroll? Not for the S Corp, but for their DBA. See, you got to know more about business and things that you're doing than your next door neighbor or the guy that you see at the fuel pump or somebody that you're sitting in a bar with and is giving you advice. That advice is only what you paid for it. It's worth zero, nothing, nada. Get a consultation, talk to somebody, talk to a CPA, talk to an enrolled agent, talk to somebody that knows the ins and outs of taxes and the tax code so that you have the right information and the knowledge to run your business the right way. Now, see what happens. You set yourself up as an LLC and you are a multi-member, but you forgot to put down that there were more than one member on your application for your employer identification number. And so the IRS expects it to be reported on Schedule C. Now, you added the other member out there. That's fine. It can be reported as a partnership without a new election because now you have a partner in your business. But that partnership return isn't due April 15th. It was due March 15th. If you didn't file an extension, you're now late. If you filed the extension on April 15th, that extension is denied and you are now late. And now the IRS tacks on penalties for late filing. And it is about $400 each member of your partnership. There's limits on that, but they're going to continue to tack that on until that return is filed. So what do you do today? Hopefully you got bookkeeping done for 2024. You give us a call. Let us get started. Get that tax return filed so we can limit the penalties. And if it's your first year, then we can go after penalty abatements and hopefully get it abated so that you won't have to pay those penalties on that partnership return. Maybe you've been a partnership for a number of years and you've been reporting it on Schedule C. What do you need to do? We need to go back and amend and file the back years of taxes. Now, that could have some benefit to it because on a partnership return, you will designate what is considered to be a guaranteed payment, and that's the only part that's going to be taxed for Social Security and Medicare. Whereas on Schedule C, the whole net profit was taxed for Social Security and Medicare. And profits get split between partnerships based on your percentage of interest. So, there's different ways we've got to go through and do it. Sometimes we can save you money by doing this and getting it filed correctly than it is to have it filed the incorrect way and continue to maybe accumulate penalties and interest. So you got to know what you're doing. Sometimes you need the advice, and sometimes it's paid advice and a consult that does it. Or sometimes you need good bookkeeping so that, hey, you've got the information to be able to do your taxes the right way. Give Trucker Tax Tools a call at 877-996-2477, and let's get started today. Let's get that filed for you. As an owner-operator, as an independent trucker, hey, there is nothing better for you than low-cost bookkeeping. It helps save you money. And yes, as we were answered June's question about, will that $25 offer, can we do it for other businesses? We've got other options for different businesses across the board. It is about the same as that $25 a week. But give us a call. Let us give you a quote for that, so that hey, we can get you started and get things done, the right way as soon as possible. Don't wait, because you need the information to run your business. You need the good information to save money on taxes. You need the advice in the consultation. Again, give us a call at 877-996-2477. I've had people tell me I don't give out our phone number enough to help. So, if you go over to Tax Talk for You, you can watch these podcasts out there and catch our number at the scroll at the bottom. You can also go to truckertaxtools.com and catch our number over there and give us a call directly. It's a free consult, free phone call. We try to make it easy as possible for you. Again, 877-996-2477. Hey, S-Corps. S-Corps again had that same deadline of March 15th. Now, if you were a corporation when you set up your company, so it ends in Inc. or it ends in company, you've got a company out there, you've applied for your employer identification number, and you put in Inc. at the end, and you put in that you wanted it to be an S-Corp. The IRS sends you that EIN letter back and says you have to do step 1, step 2, step 3 to get the application for S-Corp status. If you didn't do that, the IRS is going to tell you you have to file an 1120. That's not an S-Corp return. That's a corporate return. That's like ExxonMobil's, where the company pays the tax, and then when money gets distributed to you, it's a dividend, and then you pay the tax on it as well. So therefore, you got hit with double taxation. You get hit at the corporate level for taxes, and then the distribution out to you as a dividend is taxed on your personal return. And so therefore, this is what we call double taxation. So you need to really look at it, make sure you dotted your I's and crossed the T's, and got your S-Corp application submitted. Now, right after this break, we're going to talk about what you need to do real quick to save yourself from this, and what you can do if you forgot to file for an S-Corp status for 2024. We'll do that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes, no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
All right, so you got your company. You went back and looked at that EIN letter and you go, oh my gosh, they told me I have to file an 1120 and I really wanted it to be an S Corp. I really messed up. And we wanted it effective January 1, 2024 or some period of time in 2024. When you set up your company, now what do I need to do? Well, there's late election relief. You can put on your corporate tax return, your 1120S. This is my initial return, and include the 2553, the 8832, and affirm that you wanted this to be effective January or whatever date in 2024 when you started this company. And the IRS will usually grant this relief. I don't give you guarantees on what the IRS is going to do, but yes, for the most part, the IRS would grant late election relief for this. Now, with being an S Corp, you had to follow all the rules. And yes, you would have had to be an owner working in the business, would have had to been on payroll. If you didn't, the IRS the first year is not going to hold it against you that I have seen. Again, no guarantees what the IRS is going to do because they expect a reasonable salary for the owners in the business. But go ahead and make that election, late election, and ask for the relief. IRS should grant that in your first year. And that way you can still report things as an S Corp. But then make sure for 2025 you're doing everything right. And if you're not sure, hey, give us a call and let us go through and do a consultation with you. And let us talk a little bit more about everything you've got to do as an S Corp and make sure that you're protecting yourself and your business across the board, not just for taxes, but also, making sure that you're running the business the correct way within all the guidelines that you've got to run a business to do. And if you're looking for the legal liability limitations, hey, we tell you to call an attorney and talk to an attorney about that to make sure that you have the liability protections that you wanted when you set up this corporation or the limited liability company, so that you're protecting yourself and your personal assets outside of the business as there. But that takes an attorney to talk about those items for you. All right. I know you've been waiting for it. You owe the IRS money. Now what do? Stick your head in the sand. Ignore it. It'll go away, won't it? Wait a minute. What did he just say? I can stick my head in the sand and ignore it and it'll go away? Oh, heck no. IRS isn't going to let you get away with owing them money. Now, if you've owed them money for a number of years, you've seen the love letters that the IRS sends. You owe, you need to pay us. That's the way it works. The IRS isn't the biggest, baddest collection agency in the world for no reason at all. If the IRS wasn't there, how many people would actually file their tax returns? I don't know that I could count many, because even though you're voluntarily reporting supposedly your taxes, it's still a requirement that you've got to file your taxes every year. And if you don't, the IRS can file a tax return on your behalf, which isn't a good thing because they don't take all the deductions. They don't give you every deduction that you're entitled to. They give you what they see fit. So, get the tax returns filed. Don't let the IRS file a substitute for return and come after every dime that you've got. See, this is where Taxation Solutions Tax Relief comes in. We're your representation for strong, aggressive tax resolution to put the IRS out of your misery, get the IRS monkey off your back, not letting them walk all over you. We get to stop them. But it starts with you calling 888-930-1016. Again, 888-930-1016. Taxation Solutions Tax Relief to get that IRS monkey off your back. But in one of our previous podcasts, we talked about do it yourself. IRS representation 101. Hey, everything you need to know and everything you need to do to represent yourself against the IRS can be found at Tax Talk for You on one of our podcasts. Go to taxtalkforyou.com and you can see that podcast. But you have options. Some of the options aren't the best options. Some of the options you qualify for. Some of the options you can't qualify for. The simple one, everybody qualifies in some way, shape, or form, is going to be an installment plan. You owe the IRS money, pay them. That's what they say. Pay us every dime that we want. When you call the IRS is going to take how much you owe them, and they're going to look at all the years you owe for, and they're going to take that money and divide it up over the statute of limitations. And some of the statutes are going to require a higher payment because maybe a 2015 tax debt is only going to have a year or two before the statute runs out. So that's going to increase your payment by quite a bit, depending on the amount that you owe. And then each subsequent year will have a little bit greater statute of limitations before it runs out. So it's a total of 10 years from when you file and accept it. So that 2015 return you filed in 2016, will still have another year to go. Your 2014 tax return, as long as you didn't do anything that extended the statute of limitations, would be running out at some point this year. So if you filed an extension in 2015 and you didn't file until October, well, then you have until October before the CSETs kick in. And that's where a good tax analysis would be ideal for you to be able to determine, what are the statute of limitations? Why does the IRS require or say that I owe this money? And we can go back in and look at it. Maybe they filed a substitute for return many years ago, and that is the reason that you owe money. Or maybe you got audited, but you never replied, and it is the reason you owe money. There's a lot of different options out there of reasons why people owe the IRS money. Including just, ignoring it and thinking it's going to go away, and it doesn't. Those are the hard parts in life is, filing taxes. And when you're self-employed, running a small business, maybe even running a consulting business on the side, or maybe you've changed employers and you didn't have enough withheld from your paycheck, all reasons. Maybe you started a business and you didn't have a consultation with anybody about requirements of things that you need to do, and you never paid any estimated tax payments. And now you got a huge tax bill. So, if you're making good money and you can't qualify for any other program, installment agreement can work. Now, the interest rates are sometimes pretty high. Maybe you can go to the bank and get a lower interest rate. and it can stop penalties. And that may be the best thing, for you, for yourself, to save money and cut interest down. What you need to do is sit down and look at what the IRS interest rates are, how they're going to continue to calculate penalties, especially if this is a new tax debt for you. Older tax debt's just accumulating interest, but may not be accumulating any more penalties. And maybe we need to go after some penalty abatement to remove some of the penalties that are for you, because, we're able to sometimes abate penalties, but again, it's subject to IRS approval. So sometimes it's hit and miss. It depends on the IRS out there. We've done a very good job of removing penalties as well. And, but everybody's situation is different, and the IRS is going to look at each situation a little bit differently. And then we look at all the different other programs that are out there that the IRS has. So after this break, we'll talk about what other options besides a full pay installment agreement. And we'll talk about it right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. This must be the J day for questions. So I got a question from Jeff, and he asks, heard you do a little bit of ranching on the side. What do you have on your ranch? Well, Jeff, it's kind of funny. We kind of talk about, with some of our clients out there of, what do we do, farm, ranch. And when we get a new client in, owner, operator, truck driver, I like to get to know a little bit about what they do. And they always ask me what I do. So, I know, Jeff, you and I have talked, and I run a 29-acre ranch just outside of Northwest Houston here. We've got about 8 head of cattle out there, a couple of pigs. Now we're close to 100 chickens that are layers, and we've got about 30 meat birds that we're raising for meat, and a couple of donkeys, and and of course dogs. We have a lot of fun. We were building or adding on to the chicken coops this weekend, and building a what we call a chicken tractor, so that our meat birds, we can move them around the ranch, and they can continue to eat the grass and fertilize along the way. So those are some of the fun things we get to do on our weekends, and even our evenings when we get back, collecting eggs and making sure the chickens are fed and the pigs are fed, and fun things like that. But hey, what people really tune in for, Jeff, is taxes, bookkeeping, and that's what we're here to do. Maybe one day we'll have a whole day on farm and ranch taxes out there, because it's an interesting field out there, dealing with farm and ranch taxes as well. And I got a lot of owner operators out there that are ranchers as well, that run some farms and stuff. So, hey, I'm glad you're here and joining us out here at Tax Talk for You. And again, go to taxtalk4you.com, and you can see all of our other episodes. Hey, but what you really wanted to know was, what are my other solutions to my tax debt? We tell you to call Taxation Solutions Tax Relief. Go to taxationsolutions.net. Again, taxationsolutions.net. A lot of information there on solutions to your tax problem. And we can help save money on taxes. and, put the right solution in place. So you might be able to qualify for what we call CNC, currently non-collectible status. Currently non-collectible status means you have very little income coming in and you can't afford to make any payments. And the IRS will put you in that status for at least 2 years. They will periodically come back and ask for verification of income to make sure that you can still maintain in this status. If statute of limitations is going to run out pretty soon, the IRS is going to jump through quite a few hurdles to make sure that you can't afford to pay them. And that includes your assets and, whether it's your home, your IRAs, 401ks, all these different things that are assets to you, even jewelry or paintings and stuff like that, to make sure that you can't afford to pay them. But the biggest one's going to be income. A lot of times we can help show to the IRS that, no, you can't pull this money out of your IRA or 401k to pay them because you need this money to live on because maybe you're retired. But if you want to find out more information, give us a call at 888-930-1016. Again, 888-930-1016. And we'll be able to walk you through it or help you, especially, if you're going to qualify for CNC. Now, there's two other options out there, and these are options you hear about on the radio, and people try to sell you on these things day in and day out. And when you owe money to the IRS, these sound fantastic. They sound great. Offer and compromise, where you're going to pay far less than what you owe, or somebody used to say all the time, pennies on the dollar. I hated that comment. But nobody ever guarantees it. It's something you can't really guarantee that you're going to get accepted or qualify for. We sit down and we talk to you about the different various options. Offer and compromise, if you meet all the qualifications, it's fantastic. It can save you a lot of money. If you don't quite qualify for all that, partial pay installment agreement could be the better option, where you pay over a longer period of time during the whole statute of limitations, but you pay far less than what you owe. So you got to look at what the offer amount is going to be and what the partial pay installment agreement might be, and then look at the strings that are attached. See, there are strings to an offer and compromise, and people don't talk about this. You have to stay 100% in compliance with IRS rules and regulations, meaning filing taxes on time, not owing any money when you file your taxes. If you do owe, it's fully paid. You've made your estimated tax payments all throughout the year and every year. This compliance isn't 1 year, one time. It's 5 years from when it's accepted, but it starts with the year that you put the offer and compromise in. So if you were to file an offer and compromise, let's say you filed that offer and compromise today, you would have had to make sure that you made the first estimated tax payment that was due back in April if you're required to. If you didn't do that, the IRS, when they start reviewing the offer, before they even take the offer in as a true offer, they tell you have to make that first estimated tax payment. Or if you file it at the end of June or into July or August, then you've had to pay both estimated tax payments for 2025. If you didn't, they would just return the offer to you and you start all over again. It's not a, oh, me bad. No, it's all new paperwork to go through. If you can't be in compliance, maybe that partial pay installment agreement is the right way to go. Partial pay installment agreement does require compliance, meaning you got to file on time still. But the difference between partial pay installment agreement and offer and compromise is you've been paying on the debt for a period of time. Once the statute of limitations runs out on the oldest year, that debt is gone for good. Offer and compromise, the statute of limitations stopped running. You're on a 5-year, 100% compliance. If you fall out of compliance 4 years, 11 months into it, you still owe all the money that you owed at the time of the offer, plus any penalties and interest that accumulated over those period of time. How do I know this is true? It's written. It's in the code. I also had a client came to us many years ago. He came to us, had an offer and compromise that was accepted, and it was accepted 4 years, 11 months, 12 months, almost 12 months. They didn't file their April 15th extension. They didn't file their tax return. They owed money, didn't pay it. They filed as quick as possible in May. And the IRS sent them a letter saying, you've kicked you out of your offer and compromise. $375,000 offer was kicked out. He now owed almost $400 and some odd thousand because of penalties and interest that accumulated over those 4 years. And he had a 6-figure job and could afford to pay it. No offer and compromise for him. So would a partial pay installment agreement been better? Yes. Statute of limitations would have run out on 3 of the years during that 4-year, almost 5 years of payments. His partial pay installment agreement would have been far less. And then he would have only been left with the debt for a couple of years. And that would have been far less than the over $400,000 that he was owing because he failed on the offer and compromise. So if you're going to go offer and compromise route, be prepared to make sure you're going to be able to stay in compliance 100% for those 5 years. Plus the time period it takes for the IRS to accept the offer. So, the moral of the story is, hey, don't let somebody convince you offer and compromise that you qualify 100% without a good consultation, without a good tax analysis. Make sure that, hey, you're going to qualify for what you're paying for. And then, and only then, should you move forward with that offer and compromise. And make sure you understand the rules and regulations behind any offer and compromise. And then weigh out with your enrolled agent, like you would here at Taxation Solutions Tax Relief, you would weigh out the benefits and the costs of doing a partial pay installment agreement versus an offer and compromise. How much more or less is it going to be? Sometimes we're able to put in a partial pay installment agreement and it becomes less than what the offer and compromise is going to be because of some of the leniency the IRS has with writing off expenses. Hey, the only way you're going to know this is by calling Taxation Solutions TaxRelief.net. Go to taxationsolutions.net. Get that information out there. Hey, as we're coming to a close here today, what I suggest, strongly is go to taxtalkforyou.com, subscribe over there, never miss an episode. Let us continue to give you the information that you need to learn more about your taxes, bookkeeping, tax relief, what you need to do, how you need to file, how you need to save money, planning, budgeting, the whole works. If you have an IRS problem, go to Taxation Solutions Tax Relief and fill in the forms there, or give us a call at 888-930-1016. Again, 888-930-1016, and get the tax relief you need to save yourself money on your taxes and your tax debt. Hey, don't forget to tune in here every Monday, 10 a.m. Eastern Time at Tax Talk for You. If you subscribe, we'll remind you. Go to our Facebook page, we'll remind you. But again, go to taxtalkforyou.com and subscribe there. Every Monday, 10 a.m. Eastern Time, right here on Talk 4 TV and W4CY Radio. And we will see you next week. Have a God bless, glorious week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk 4 TV. Don't forget to check this and past episodes at TaxTalkForYou.com. See you next week at W4CY.com.